I think from a conflict perspective, it's still too early to tell. Europe is going to be far more impacted than the United States is, so I don't disagree with Andrew. If in fact this conflict does end, as the president's been saying for the last month, in 2 to 3 weeks. So that seems to be his constant line: 2 to 3 weeks, 2 to 3 weeks. Yet all of last night was rather contradictory to that. So I think it's very difficult to sit here and lay a stake on what the expectations are moving forward, because until there seems to be a real end to the conflict, just the variables and the factors really are they vary from one side to the other. I don't think it's fair to say one way or the other. I think Europe more than the United States is going to be they're on that seesaw effect more than just anyone else in Asia. It's too early to kind of sit here with a crystal ball, which I know is not what listeners want to hear. They want something actionable and they want something to be able to invest on. However, in moments like this, it's important to A, remember what the strategy is, and B, I think it's also important to remember that your strategy does need to include some sense of flexibility in moments like this, and no action sometimes can be the right course of action to then be able to not throw good money at a bad situation. I fielded plenty of calls and made plenty of calls right now from clients about, okay, is this a good time to invest? We're down off of highs. We're trading at discounts, and we have seen inflows into the market, but I think this is sort of a catching falling knife scenario where rather see some turnaround. Sorry to divert from your question a little bit, but I think it's all in concert here. Rather see some bottoming and then flip back up to be able to